Why selective participation protects capital. Access is often mistaken for advantage in digital asset markets. New venues and instruments appear continuously, creating the perception that broader participation improves outcomes. For disciplined allocators, the opposite is often true. Selective participation, enforced through digital asset market access controls, protects capital more reliably than unrestricted exposure. The hidden risk of broad access. Tokenized markets reduce barriers to entry by design, but wider access introduces layers of risk that may not be visible at entry. Venue instability, operational fragility, counterparty uncertainty, liquidity fragmentation. Each additional access point expands the surface area for failure. Losses do not need to come from price movement alone. Operational breakdown is sufficient. Access without limits compounds exposure. Selective participation as a risk control. Selective participation is not avoidance, it is discipline. Before capital is deployed, eligibility standards are applied. Participation criteria typically include operational reliability, governance transparency, liquidity depth under stress, settlement and reconciliation consistency. If conditions are not met, capital remains absent. Exclusion reduces exposure to risks that cannot be mitigated downstream. Eligibility controls filter risk upstream. Eligibility controls define which venues and instruments are accessible. They evaluate uptime and settlement consistency, governance accountability, liquidity resilience, system integration stability. These assessments are continuous. Markets that deteriorate can be removed from eligibility without delay. Capital exposure begins only where operational behavior is observable and repeatable. Intentional limits preserve consistency. Limits express risk discipline. They define maximum exposure per venue, concentration thresholds, intraday funding tolerances, operational capacity boundaries. When limits are explicit, decision-making remains stable under pressure. Unchecked participation often expands gradually during favorable conditions and becomes visible only during stress. Selective participation prevents silent accumulation of fragility. Why more access increases complexity. Every new protocol or venue introduces additional integration points, new reconciliation workflows, expanded operational dependencies, distinct failure modes. Complexity grows faster than control capacity when participation is unrestricted. Selective access keeps operational scope aligned with governance strength. Focus improves oversight. Behavioral risk declines with boundaries. Unlimited participation encourages impulsive expansion. Restricted access normalizes restraint. Requests to expand participation require documented evaluation and formal approval. This structure reduces narrative-driven decisions and preserves consistency. Behavioral discipline strengthens as choice narrows. Kenson Investments helps institutions design selective participation frameworks that align access with governance and operational capacity. If your organization values disciplined capital protection, clarity begins with intentional limits. Visit kensoninvestments.com and connect with our team.